Hi there folks, now in this week's video I want to talk to you about brokers, the different types of brokers and the pros and cons of each. Then we'll talk about factors such as the spread and the different trading platforms that you can use. There are plenty out there. So at the end of this video you're going to be better equipped to decide what broker best suits your trading needs. Hope you enjoy. Now when you're trading the financial markets, doesn't matter what financial market it is, whether it's the stock market or the commodity markets, bonds or whatever, Forex, of course, you need to have a broker. The broker is basically the guy in the middle that's going to conduct the business on your behalf. So if you, for example, you're going on holiday and you want to change up your currency for the foreign currency, you go to the bank or the post office or the bureau de change. That bureau de change is basically acting as a broker. He's basically getting the currency that you desire from somewhere else and he's giving it to you at an exchange rate. If you go to your mate or your brother and ask him to exchange your dollars, well, you're just trading with the counterparty direct. But more often than not, you'll be using a broker to conduct your business. And that's exactly the same in the Forex market. Now I'm going to talk to you about the two different types of brokers that we use when we're trading the Forex market. Basically, you've got the dealing desk, often known as the market makers, and you've got the no dealing desk. Now there's two types of no dealing desk broker. You've got the straight through processing broker plus ECN, electronic communications network, more about that in just a second, or just plain ECN. Let me explain how the Forex market works very briefly. I have referred to this in a previous lesson, but the Forex market basically works in this big network. It's called an electronic communications network, or the ECN. Here is made up of all the different banks, liquidity providers, other brokers as well, individuals, hedge funds, mutual funds and so forth, all putting prices into a massive network of prices, and your broker sits in the middle. And you basically sit there on your machine at home and you access your broker who has access to this massive liquidity pool. Now let's talk about those two different types that I've just mentioned. First of all, you've got the dealing desk broker. So basically a dealing desk broker, the trader's sitting here, he places his order into the trading platform and it goes straight to the dealing desk. Now the dealing desk broker doesn't necessarily put your trade into that big network of prices that you've just seen. Okay, so if you were a consistently winning trader, chances are he would put that trade straight through into the market. So the winning trades of the clients would either be passed into that big liquidity pool, or he would match it against some losing clients that he may have. But basically there is someone at the end of that, or it's normally electronic these days, but there's someone basically making a decision what to do with your trade as you place it in. That's often referred to as an A-book broker. Now the dirty word, the B-book broker, you may have heard that before. The B-book broker basically is matching the trade with his own client money. So basically, well, not say client money, he's matching the trade with his own account. So your profits are his losses. Your losses are therefore his profits. These are known as B-book brokers. Not necessarily a bad thing, that's just how they operate. And it's worthwhile knowing whether your broker is indeed a B-book broker or not. But most brokers are not really concerned about your individual trades that are going through. That's how they make their business. That's basically a dealing desk broker, often referred to as a market maker. Basically making a price around the liquidity pool that he has access to. Then you've got the no dealing desk broker. This is basically where the trader sits there at home on his workstation, he puts the trading order into the trading platform and it goes straight through to that big liquidity pool that I spoke about, where he's matching the trades against banks, hedge funds, mutual funds, other brokers and other clients as well. So your order, the moment you click, goes straight into that liquidity pool. Again, that is a no dealing desk broker. There's no human intervention. So what do you want to consider when you're looking for a particular broker? Well, I think the most important thing you need to consider when you're looking at choosing a broker is, are they regulated and in which country are they regulated? Regulated brokers have passed certain tests and certain criteria to get regulated. And then you want to look at the execution speeds. Are your trades getting executed instantaneously or are there delays? Those two different broker types do have varying degrees of delays, and I'm going to talk about that on the summary page in a minute. The leverage. Leverage, obviously, a lot of brokers offer massive leverage these days, 100 to 1, 200 to 1, 500 to 1. Don't be fooled into that. Just because they offer high leverage doesn't mean you need to be trading with high leverage, but it does entice some people, some traders, to use them because of the high leverage. I would say, that if you use excessive leverage, it is the short, fast way to the poorhouse, unless you certainly know what you're doing. But when you're starting off, I suggest you don't look at leverage as a major factor. Fast, easy deposits and withdrawals. You want to make sure that you can withdraw your money the moment you want it back. And of course deposits as well, and not to get charged for that. You shouldn't get charged for placing a deposit. So fast withdrawals and deposits, quite important. Maybe it's a good test to maybe just try it out when you start off with just a small amount of money, 10 bucks or whatever it is, what the minimum is, and then withdraw it to see how quick it took to come back to you. 24 hours customer support and live chat. That's quite important, I think, when you want to get hold of your broker, got a problem, whatever reason it is, you want to make sure that there's someone there that's going to answer you and talk to you as you have these questions. The spread as well. The spread is the difference between the buying price and the selling price. Difference between no dealing desk broker and dealing desk brokers. They do have varying degrees of spread differential. I'll talk about that in a second. But of course that is a cost, because obviously if there's a wide spread, then the cost of buying and selling becomes more expensive. Imagine nothing moved and you bought and then sold, of course you'd lose the difference of the spread. And of course if you're buying and you buy the asking price, of course you need the price to move up above where you bought it from, above the distance of the spread, in order to establish a profit at some point. Commissions and the swap as well. Commissions, brokers charge commission as well for the different types of accounts that you have or different trades that you do. Check out the commissions as well. The market is pretty fierce in terms of competition. They're all there fighting for your business. So you can get quite competitive commissions these days. And the swap, more about that later on in the course. Swap basically is a charge. It's a small charge that you may get charged for carrying positions overnight in the Forex market, but it's pretty small, not a massive consideration unless you're trading with large account sizes and unless you're trading with long-term positions, 3 months, 6 months, a year or so forth. And the selection of markets, what the broker is offering you. What are you allowed to trade with your money that you have deposited? Can you trade indices? Can you trade commodities? Can you trade stocks? Of course, can you trade the forex pairs as well? You might want to trade some of the exotics, which are the currency pairs that are not traded as much. So what I've done now, I just put this summary together, because you might be asking at this stage, well, what broker shall I use? Should I use a dealing desk broker, or should I use a straight through ECN broker? Okay, this is basically a bit of a summary of the 2 or the 3 different types. So here you've got the market makers. Market makers tend to have fixed spreads. Okay, so the spreads don't widen in terms of market volatility and so forth. The spreads are fixed. Could be 1 pip, 2 pips, or whatever it is. The dealing desk broker generally takes the opposite side of your trade. Don't get too worried about that. People get really freaked out by that sometimes, thinking the broker's against me. But the broker's looking at the big liquidity pool. He's not looking at your small trade that you're putting in to stop you out just for, make his $50 or something. They're much too big for that. They're using synthetic quotes, so they're not actually quoting. They're quoting what they see from the liquidity pool, but you're not actually buying from the seller, and you're not actually selling to the buyer. They're synthetic quotes. Possible requotes. Now, with a market maker, sometimes when you see a price on the screen, because the broker is taking the other side of the trade, the moment you hit your mouse button, you don't always get the trade. There may be a delay, and the broker may say you've missed that trade because the market has moved very quickly, and they'll come back with a requote, a new price. So often with the dealing desk brokers, the market makers, you are prone to get these requotes. Then you've got the no dealing desk broker, the straight through processing broker. Basically has variable spreads. Variable spreads basically means the spreads widen and narrow in terms of liquidity. So in times when the markets are very volatile and there's the Europeans are open and the US are open and so forth, and that's obviously going to be a good time, and the spreads tighten in. But in terms of liquidity drying up, spreads widen. So you've got variable spreads. Basically, it's basically a link. It's like a bridge, if you like, between the trader and that liquidity pool. Basically, putting your orders straight through into that liquidity pool. Remember that big map of ECN, what have you. They're basically, no dealing desk broker is acting as that as that bridge. And they are true prices, and they are getting their prices, well, the prices you see are the prices that they're getting from the liquidity pool. The other thing about that is there are no quotes, but you might get slippage. Slippage is basically when you see the price on the screen, hit the buy. If you just hit buy at market, you might not necessarily get the price you see on the screen. You might get a differential in price. Basically, what the straight-through processing broker does, it takes quotes from all the different liquidity providers and it gives you a price. Gives you the best price of all the bids and the best price of all the offers, and it basically works out the best price for you. But for that, they obviously need to get paid. They put a lot of money into their infrastructure and so forth. So what they might do is put an extra little bit of a price on the spread. So the spreads might be wider than you get, say, than from the true ECN and straight-through processing broker. So they will basically make their money by adding on an additional spread. So, for example, if the spread is 31 to 32, they might make a spread of 30 to 33. So they might make a small percentage either side of the liquidity pool's quote. And no possible requotes. Yes, slippage mentioned that. So then you've got the no dealing desk and the straight-through processing ECN broker. Again, same thing, variable spreads. So that's the bit of a cost. No, they will. The spreads will widen, of course, in terms of volatility. They may add a commission on as well. Whereas a straight-through processing normally wouldn't have the commission, but the no dealing desk will have a commission. Sometimes you may just pay the commission and the spreads basically are as tight as flat. So there's no differential between the buying price and the selling price, just pay the commission. Again, depending on the currency pair that you're trading. Again, same thing. It is the link between the trader and the liquidity pool, plus. They also have links to other ECN brokers as well. So you've got a bigger pool of prices normally with the STP ECN broker. And so sometimes you get tighter prices there as well. And they are, of course, true prices directly provided by the liquidity pool. No requotes. Again, normally when you hit the buy, you're going to buy. Not necessarily get the price you see on the screen. You may pay a little bit more, or you may sell for slightly less. Depending on slippage. You have to watch that, of course, over times of high volatility, over a data release or over an election result or so forth. And it displays the depth of the market as well. So you can see with this straight-through processing ECN broker what is above and what is below the current market price as well. So they're basically the three different styles of brokers. Really, it's a matter of choice. You can certainly discuss with us if you want to discuss it further which one is going for you. I personally think using one of these straight-through processing brokers, paying a small commission, is maybe the right way to do it. And certainly the brokers that we have on our website under the broker section basically are these types of brokers where you go straight through into the market. They might charge a little bit of a commission. The different brokers offer different trading platforms. A lot of brokers these days are MT4, MT5 platforms, looking something like that. They offer C-Trader, different ways of displaying price, different bells and whistles indicators. A lot of people use TradingView these days. I know quite a few members in our room use the TradingView as well. TradingView is linked to a couple of brokers. We don't have any relationships with those, but some of our members would have a TradingView platform, which I think you have to pay for, but just execute their trades using an MT4 platform. So most of the brokers these days will offer MT4, MT5, C-Trader and so forth. So bear that in mind when you're choosing a broker as well, what platforms they provide. Hi there folks, hopefully you enjoyed that video. Hopefully you learned something there as well. Now don't forget to follow us on all our other socials. I'm always leaving tips and tricks on there as well. Don't forget to give this video a like if indeed you liked it. Give me a thumbs up. Don't forget to subscribe to the channel and hit that notification that will alert you when my next video has been released, which will be very soon. See you there.